Vomma explained through real crash and how I made 8% while others blew up. Most traders know about delta, vega, even theta, but almost no one talks about Vomma, even though it's the Greek that really matters when volatility spikes. And on August 5th, 2024, when the market crashed, my real money portfolio was up nearly 8% in a single day. Not because I guessed right, but because Vomma was on my side. I want to do two things in this video. Number one, share the story of how I learned to build Vomma into my trading system. And number two, teach you what Vomma actually is in plain English so you don't get blindsided in the next volatility event. Because the truth is, if you're short options when Vomma shows up, you're not just wrong, you're wrecked. So let's start with the basics. Most traders are familiar with Vega, which measures how much an option's price changes when implied volatility moves. But Vomma, it's what tells you how fast Vega itself is changing. In normal conditions, Vega moves gradually, but in a panic, like a flash crash, implied volatility doesn't just rise, it surges. And that's when Vomma kicks in. It amplifies your exposure to Vega. So if you're short Vega, Vomma can supercharge your losses. But if you're long Vega, like I was, it can lead to explosive gains, literally. I didn't just learn this from a book. Back in 2017, I had done hundreds of backtests and realized something strange. During sharp sell-offs, my hedges were exploding in value, way more than Vega alone could explain. And that's when I saw Vomma in action, and the light bulb went off. I needed to stop ignoring second order Greeks and start designing trades to benefit from them. That epiphany changed how I trade volatility forever. When COVID hit in March of 2020, Vomma confirmed what I already knew. But the real spotlight moment came on August 5th, 2024. The market dropped hard, panic hit, volatility surged, and most premium sellers took big losses. Some were completely wiped out, but my PL5 Pro portfolio, fully live, fully documented, finished that day up nearly 8%. And that's not a cherry pick trade. That's my entire portfolio return for that day. Why? Because Vomma was built in. The hedges I had in place exploded in value. And I've seen hedges go up as much as 90 times. So let's give you the practical takeaway. If you sell premium, you're already carrying negative Vega. But Vomma is the hidden multiplier that makes Vega worse when it matters the most. Most people don't lose in normal markets, they lose when the VIX explodes. And Vomma is what makes the explosion hurt more than you expect. And here's how I manage Vomma in the PL5 Pro. Number one, I keep size tight when volatility is low. That's when Vomma risk is the highest. I stay long tails, far out of the money puts that act like crash insurance. And I structure my trades so my hedges get stronger, not weaker during panic. And I also make sure that I am proactively hedged. I'm hedged before the panic hits. So here's an example of looking at positive Vomma, but you also have negative Vega. So on a risk graph, so you can see that the position is here. You can see the Vega is negative, and it's negative all the way till you get down into this area, this, where the price gets around the 4,000. You can see where the volatility, this is a histogram, by the way, where the volatility starts to go up significantly. So it's negative, negative, negative. Now all of a sudden the Vega is positive, positive, positive. So that is Vomma in action there, where you can see kind of where you're actually going to get an exponential increase in Vega, depending on where you are on the risk graph. So you could actually have a position with negative Vega, but it actually has some positive Vomma here because the Vega is going to increase exponentially and positively. So this is positive Vomma. That's what it means to profit when others are paralyzed. So Vomma isn't just theory to me, it's a risk factor that I've seen pay off multiple times in real markets with real money. And if you want to learn to trade like this, to build in second order protections and real edges most traders don't even understand, stick around and I'll keep breaking this down on the channel.